Good afternoon, guys, and welcome to the podcast. Happy Thanksgiving week. And today I've got a CEO, financial advisor, helping clients pursue wealth building strategies, speaker, and author. We'll talk about her book, Julia Carlson, author of Money Loves You, coming out of Oregon. And I'm really happy to have her on the show today to talk about all things financial planning, wealth planning, taxes, change in administration. And so, Julia, welcome.
Yeah, thanks for having me. And my company's name is Financial Freedom, which I feel like you like that too.
Yeah, I love that, and I love how we are our goals align. So briefly
Yeah.
talk about your story and your journey, and I'm excited to delve into the conversation.
Sure. I have a great money story. Starting young, my parents taught me about money. My grandfather taught me about stocks when I was a teenager. And so I landed in finance when I was 20 years old, got fully licensed, worked in a bank investment department, and then at 23 left the bank and started what is now Financial Freedom Wealth Management Group. So it's been a fun journey. We now have 23 employees. We have 4 offices physically in Oregon, but serve clients in most states across the nation.
Yeah, really interesting. And yeah, so diving into the first question is just, I love you're no stranger to the podcast. Explain your core message. Money loves you. And I love this book because most people are chasing after money, but you talk about money coming to you. So how does shifting your mindset about money lead to better financial outcomes?
Yeah, I like to say money meets you where you're at. And serving a lot of clients over the years, I saw really 2 different camps. One camp of clients that had a very proactive, positive relationship with money, where they're like, anything's possible. I can manage my money. I can learn if I don't know how. I can find the right people to teach me. And so there was that camp that did really well with money, and then there was this other camp where it was, I don't know what to do with money. Money's so hard. I hate money. And of course, what's going to manifest in their lives? A lot of that. Like it is going to be overwhelming. They are going to ignore it. And so, what I have found is that if we can have the energy of, hey, money loves you, it has your back, like it's a friend, it's like we can have this really great relationship with it. It's that empowering place to start, and then how do you partner with it to build financial independence? Because I think financial freedom, we can all experience that without having to have financial independence.
Mm,
So I
interesting.
can talk more about that.
Yeah, because what I've learned and what I've realized is people's definitions are different, and the way I view financial independence and freedom is different. So talk about your definition, and we'll find some common ground to discuss.
Yeah. So I believe financial freedom is accessible to all of us. And what it means is that you have an intentional plan, that you're walking that plan, like you're taking action on that plan to get you to your financial independence goals. Because financial independence can sometimes take a lifetime, depending on the resources, the income you have, your family structure, a lot of things, whether you're self-employed, whether you're an employee, whether you're a business owner, all those things impact the ability to get financially independent. But financial freedom just means, hey, I know where I'm going. I have the plan in place and I'm taking action. I'm walking that path.
Mm,
So, in the discipline of that is where you find freedom.
mm. Oh, interesting. Yeah, wow, that's you're the first guest that has a distinction between financial independence and freedom, and it's good to hear differing perspectives. One thing that struck out to me is when you're talking about money mindsets, and it brings me to this to the dinner table as a kid, and some people they get their money imprints and their stories, and it manifests. And so, talk about just how you can start to identify these bad stories and change it, and which, because you were talking about just people being bad with money, and I'm like, how do you be bad with money? I don't. So talk about that.
Yeah, it starts at an early age, like our caretakers and what we heard about money in the house, where your parents fighting about money. I think 43% of divorces end due to money. So it's out there. And I think the first thing is awareness to what our money story is. So The question I like to ask is, what was your earliest memory around money? What did your parents believe around money? And just starting to have a dialogue and really helping clients verbally process, like, what is deep down in that subconscious that is probably causing them to take certain actions that may or may not be in their best interest for their finances. And the most common thing I see is just this like scarcity or fear, and which I think manifests in avoiding money. Like people just, I think, just put it off for another day. Life's busy. We have careers, we have kids, we have all these things going on. And so unless people really sit down and get intentional with their money, it's all of these scripts, mostly negative, are running, impacting their day-to-day behavior.
Mhm. Uh, because it's interesting because you described this symptom of being bad with money. And what are some of the scripts leading to this symptom of being bad with money? And what does being bad with money look like?
Okay, so this is good. So I would consider, so bad could be like spending more than you're making consistently, right? Not a one-off thing, but like you're consistently overspending. Or you have a plan, you're like, okay, this is my plan. And then you sabotage that. So you start making decisions that aren't in alignment with what you said you were going to do. And so that could be, the symptom is overspending money. The root cause could be, I don't feel like I'm worthy. So I'm going to go try to get the dopamine hit of a new car, a new clothes, whatever it is, to make me feel good, which then makes the choices. If you are overspending, I'm not saying buying nice things is bad, but I'm saying is if it's out of alignment with what your plans are. And so if you're saying, hey, I'm going to do this, but then you turn around and do something else, that is a deep rooted belief of something else going on there. So it's either I'm not good enough, I'm not worthy, I don't deserve it, something like that.
Yeah. And there's so many different money scripts because I love taking your perspective and it's interesting. My next question is we talk about you have an anti-budget framework and because most
Yeah.
people struggle with these budgeting and what is the anti-budget system and how does it empower individuals to achieve financial freedom?
Yeah. Over again, my career of helping people, what I've realized is people are like they resist budgeting. Again, it feels like something very restrictive. It tells like someone is telling you what to do, even if you set up your own budget. So it can feel disempowering. And I think the idea of the anti-budget is, hey, I get to be in charge of how I spend my money. And that's the energy that you bring to it. And I'm not saying don't track, because we are going to track where your money. I think that's very important, but you're going to allocate your money based on what you value, based on what brings joy to you. Because all of us like to spend money differently. All of us like different things. And so I think if you can approach it in the way that, hey, a nice house payment or a nice car, buying a car, whatever those things that you value are, have to be in that spending plan, as opposed to be following guidelines or rules that are somebody else's rules. So I think the way that I think about it is I set it up to, hey, what brings you joy? How are we going to spend that money there? What are your comforts, like your cell phone bill, the things we have to pay, utilities to keep the lights on? And then there's usually frustration costs where this is the money that, it's like for me, I can go to Target with my kids and I can come out spending $500 and I'm like, what did we just spend money on? It wasn't a plan, right? And so it's like you just want to make sure there's intentionality to it and the money is flowing to what brings you joy.
Mm. Interesting. And it brings me to my next question because we self-worth, wealth, and basically because you're talking about circulating money to basically live life and what about there's people that overspend and then there's people that underspend like people
Yeah.
like for me I used to just be like super frugal and just like every dollar was a ink like it felt like I was increasing my net worth, and that made me feel good. But it was like, but so what is the correlation between self-worth, wealth, and how much you spend?
Yeah, I have clients like that too, right? They save all of their life and they get to a place where they are financially independent, but then they don't feel like they can spend. And so we have to have the conversation of it's joy, it's fulfillment, it's spending money on things that are important to you. And that's one thing if you already are financially independent. But like you, if you were doing that to reach your goals,
Mm,
and my guess is there was a goal attached to that. So you could do other things. And there
mm.
could be a season in your life where you're like, you know what? I'm going to put my head down, not going to spend money. I'm going to meet this goal. But then there's usually a season of like fruit where you get to enjoy that and have fun. So I hope that's what you are, where you're at now. I
Yeah.
think, yeah, I think there's this like we all get this one life to live. And I think that money is meant to be in movement, it's giving and receiving. And so I think if you have one without the other, it's going to show up in some way in your life.
Yeah, it reminds me because I would have a certain goal, and then like for example, if I I would agonize over like a $10 purchase because it would keep me like $10 under my goal, which I mean, you still $10 isn't gonna break the bank, but it was just like agonizing and just but there has to be some like kind of leeway.
Grace.
Um,
Yeah. At the same time, I've seen where people have little amounts to save and don't save it because they don't think it'll amount to much. It just depends on where income levels are at. But for me, I started saving $25 a month when I was a teenager. And that really instilled really great habits to where now that I'm making much more, I'm still saving quite a bit, but I'm also having fun too.
yeah, it's like you were describing that season, and then you can enjoy the fruits. And when you've reached a certain level, what the other thing I have a question about is because just the future of financial advisory services. Because past guests have talked about like mutual funds, and I don't touch mutual funds since the early 2000s, and now we got zero commission, we got Robinhood. And so talk about future of financial advisory services and
Sure.
where AI is coming in. I'm curious to hear your thoughts.
Yeah, we use a variety of investments for our clients, and I think that the investment management, the cost of investing, that is all going to go way down. I think what will still be needed in our world is the actual emotional intelligence, the estate planning, the tax planning, all of the management, the human aspects of what we do for clients. And so already there's two ways for clients to engage with us. Like we've adopted this model where we have more of a retainer model that like an attorney or other professionals would use. That way they can get that rich advice and help and guidance and that advisor in their corner without us actually having to manage the money. But then there's also a lot of clients that don't want to learn all the details, that don't want to pick the right ETF or stocks and or the right combination of all of that. And so that's where they'll delegate the actual investment management to us. So lots of different ways. I think we'll be in this era probably for the next 10, 20 years where it's like a hybrid. But then it will be interesting to see how we evolve.
Mm. How are you thinking about artificial intelligence, and how are you bracing or preparing for its impact?
Yeah, I think that having exposure in investment wise for our clients is really crucial. I think this is going to be a whole new, it's going to change our world as we see it. And we are already implementing that into our practice, whether it be like note taking when we're meeting with clients. We have to take our notes like a human. And so now we'll have technology that will take that notes for us in such a better way. And so I think that I'm more of an early adopter of the AI, and I think that they'll probably be my industry is very um older, and so I think there's going to be a lot of the industry that just decides to either sell their practices or retire because they don't want to adopt the technology at the speed that it's going to be coming. And so I think it only makes us better. I think that's the way we have to look at it.
Yeah.
Yeah.
It reminds me when the electronic health records came to a lot
Oh,
of
yeah.
the older doctors, they were just like, yeah, I'm not going to learn this. Had 60 years in my career. I'm just going to retire, which is interesting. Talk about client base, because a lot of the boomer, older Gen X, they're like very heavily equity bond, and I'm not sure bonds, but real estate, traditional. And then this newer, like the millennials, Gen Z, they're interested in digital assets. And what sort of questions are you getting among clients around new areas of investment, such as AI, technology, digital assets? I'm just trying to get a pulse on where everything is.
Yeah, so I would say the majority of our clients are like 50 and older. So we do tend to get the clients that are more like safe with what they know. But then my peers and younger generation, they definitely have all the questions around cryptocurrency, around AI. How do I make sure I'm investing in all of this
Mm.
prudently, right? Because at this stage of game, there is a level of risk there because it hasn't been around. We're talking, gosh, 15 years. So it's just now making its way into more mainstream. And I think I'm my rule, if you will, or guideline is to be okay with the money that you invest, that if you don't see it again, you're going to be okay. Don't bet the farm. But at the same time, I think investing in those assets is the best experience that you can get to start getting comfortable, to start understanding how they work. And so I do think it'll be interesting over the next 4 years, like how I think it will become even more mainstream. They have to figure out the regulation to it. And that I think we'll be in a different position 4 years from now for sure.
Yeah, especially with a new administration, because it's very pro innovation, and like the
Oh yeah.
yeah, Biden administration was anti innovation, and so what sort of questions are you getting around just how clients should be thinking about and preparing for a change in administration, change in tax policy, how they should be repositioning themselves, rebalancing what asset classes. Just again, I'm very curious.
Yeah, like you follow what we've been talking about. I think the more those small companies that tend to be more innovative, that tend to be more interest rate sensitive, when the interest rates go down, that will be pro business in that small company group. So we like small caps, like we've transitioned a bigger percentage there in the recent months, looking at all of the indicators. And then you'll see that there's now whole funds and sectors that are dedicated to AI and cryptocurrency. And I think instead of going and buying one thing, you can buy an ETF that has exposure to a whole segment of market, which is going to be a little less risk than buying just one specific security. And so those are some areas where I can't give specific advice, but I would say leaning into and understanding that there's opportunity there.
Interesting. So rounding it out, we have around 2 minutes. Talk about your book, and talk about and how people can find you and follow you, and how, yeah, and words of inspiration for those achieving or on their path towards financial independence and financial freedom.
Yeah, so I'll just end. I think to finish, my thought is I think we're going to be in a very friendly tax environment, especially for investors and specifically real estate investors. And then also business owners, people that are setting themselves up as business owners. I think the incentives for taxes is going to be all centered around that. So I would really encourage you to think about that in your planning as well.
Yeah.
But yeah, my book, Money Loves You, is on Amazon. So you can get a copy of the book there. And it really is a lot around examining that relationship we have with money, looking at our subconscious beliefs and bringing awareness to that. And really, how do you have this really great relationship with money where you gain mastery over it? And then you can go into the financial principles of building wealth. And so, that's what the book is about. And then my website is juliamcarlson.com.
I love that. And thanks so much for coming on and sharing your experience and wisdom. Happy holidays, and keep up the great work.
Thank you. Thanks for having me.